Okay, I think I was muted. Good evening, everyone. Welcome to Crypto Pulse Weekly. Hope you've had a wonderful week so far. I know the markets have been choppy and quite turbulent, to be honest. But it's all about to come to an end. I see some drama coming up today as well. I guess the market makers have decided to sort of create some weekend drama. So it'll be interesting to see where the price goes from here. But one thing is sure, like I told people on Monday and Tuesday, the market is always designed by the market makers to inflict the maximum amount of pain. What do I mean? Especially a growing market, it's always designed to make sure that the largest number of retailers or retail traders are wrong. Meaning, when you look at the chart and you come to a conclusion that this is the way I'm taking my position, and you take your position as you have been taught, and you put your stop loss, the market is designed to take out your stop loss before going in the right direction. It's not only peculiar to Bitcoin, it's pretty much in all equities markets. And the reason is that the institutions play a zero-sum game. So it's a winner take all for them. And the only way they can do that is to, as much as possible, try to wipe out the small guys. Unfortunately, well, it's the dog eats dog world out there. And that's why, I always try to campaign and implore people not to sell into market weakness, because if you do that, you're essentially playing into the hands of the market makers and selling yourself short. So it's important to understand this. I mean, it's all, I've seen it in stocks, I've seen it in Forex markets, and in equity market as well. The market makers make sure that, one, they see what they want you to see in terms of the analysis of the chart. So they create a scenario that shows that sentiment. Then they counter that scenario with price action, so that a schoolboy trader who is religiously following the rules, guaranteed he's going to get wiped out more than 70% of the time. Having said that, let's kick off. Let's kick off for today. As usual, we'll go through a brief market update. I'm just going to say in advance, if there's something you want me to talk about today, I've just left the space today. I don't have anything on my mind. I can talk about market manipulation, but that's about the only thing I want to talk about. If there's anything you also want me to talk about, just put it in the chat box. And when we get to the Crypto Drips question and answer, or before the question and answer, I'll talk about it. So if there's anything you want me to talk about, just put it in the chat box and take a note of it. And I'll get to it later in this meeting. So the first thing I want to talk about is the volatility that we've seen this week. Two things. Volatility is expected when we are the last Friday of the month. And I think I mentioned this before. There's something called options expiry. So options expiry are like large scale bets. They're like big boys bets, not big boys, but big institutional bets on the price action of particular commodities or equities or assets. So in this case, the price expiry is on Bitcoin. And what the bet is that the institutions take a bet that by close of business on Friday, New York, the price of Bitcoin is going to be selling at 32K. Now, if you take a bet that is going to be selling below 32K or below 33K, I try to explain then that what they then do is they slash the money they're betting into like 4 parts. They put one on the bet. Let's say they have 10 billion. They put 2.5 billion on the bet, which is the option itself. They can leverage that to 10x, meaning 1 to 10, meaning that they are leveraged at 25 billion. Now, once that happens, what it means is that there's a 25 billion options expiry for the price of Bitcoin. So it might be a put option, meaning that, if the price goes above 33K on the day at that time, then they have the option of selling at that particular price. Or if it might be the other way around, if the price comes below, they have the option of selling at that price. Now, if their expected targets hits, so let's say in this case it was it's a put now. I can't remember the right word, but that the expected target hit and the price is below 33K, what it means is they've won the bet. Now, if they win the bet, what that means is they won a bet of 25 billion because they took a position of 25 billion. And what it then means is that they're going to make that amount of money off the bets. So to ensure that the bet comes true, then they go into reverse manipulation. What do I mean? So to ensure that that 25 billion that they've staked with $2.5 billion comes to pass, then they go into the futures market or the derivative markets and go into the spot market and make sure that the price comes down. How do you make sure the price comes down? You take a short order or sell position against Bitcoin in the futures platform or the futures exchanges, or you buy Bitcoin for that same amount and then sell it suddenly, maybe like an hour or two before that option expires. What that does is, that of course, it automatically drags down the price. Now, if they are lucky and they are very strategic with it, it might be at a time where the sentiment has shifted to bullish, meaning there are more leverage longs in the market. What does that mean is that their sudden short position are going to wipe out those leverage longs. So they make money short in the markets, in the futures markets. Then they make money when the option expiry strikes, and it strikes below their target price of 33K. This is what drives the price crazy. And I've tried to explain this before, but I'm saying it again so that people understand why the price is not correlating to what is actually happening fundamentally or what is happening on chain. Another thing I need to talk about in terms of volatility this week. So yes, we've hit 28K back. We didn't go beyond 41K. There's a rule from the Securities and Exchange Commission in the United States that is now forbidding hedge funds from taking very heavy short positions. So the rule got an amendment about 3 weeks ago, but that amendment passed, I think, on Monday or Tuesday. And what that amendment says is that once they take a leverage position, they have to report minute by minute what their position size is versus actual amount they have in stake. What it means is that if they take a position on short on the stock market as a hedge fund, they need to report one, what is the value of that short? So let's say they took a 25 billion short position. How much do they have in stake? If they have 2.5 billion, that means they are leveraged 1 to 10. That is a huge leverage by any standard. And they need to report every minute that they are in that position. Of course, it's a cumbersome requirement that the SEC has placed on the hedge funds. And as a matter of fact, the original injunction that was raised by SEC, some of the hedge funds lawyers actually went to file a lawsuit to sort of execute a stay of action because it was essentially going to mean that they can no longer bamboozle the market the way they bamboozled the market with GMC stock and AMC, and then they got wiped out suddenly by an independent army. So these and many other things are going to be responsible for reduced short positions over the course of the year. But the one that we're seeing right now, which I'm going to come to in the price of Bitcoin, is by one of the major I don't want to call them babasale, as they say in my mother tongue. They are the major market makers. Well, they're the premier market makers. They are one of the first and biggest crypto exchanges that showed up on the radar, Bitfinex. And they were the first that came up with features. At some point in the last bull run, they were the biggest, but then they were shafting a lot of people. So people just generally left them, but they still own a significant amount of the markets. I mean, I don't know how much their BTC stash is, but it's definitely huge. And I'm going to come to that during the class as well. They have a very huge stash of BTC. And the amount of short positions I've seen today, I've not seen any short position that much in the last 24 hours, in a 24-hour period ever before. So it's obvious that, they're up to something in terms of market manipulation. But as I always say, don't get distracted by the price action. It is a magician's trick. It is just to ensure that they hoodwink you by the price action while you sell into market weakness. What you should keep your eye on is to keep your eye on the magician, not the magician's trick. Because if you're keeping your eye on the magician's trick, you are going to get distracted at some point in time. But before you know it, he's carried out the trick, and you're still watching, what he's trying to do. Meanwhile, he's distracted you. And so what market makers do is essentially do the same thing. They push the price crazily up and down and then distract you, and you get psychological, or you get emotional, and then respond emotionally. As you probably know, emotional decision making is not the best, because it means that you have to shut down almost completely the logical centers in your brain when you're making emotional decisions. It's a different thing when your emotion is not high and you're making a logical decision. But we are witnessing an emotion of fear or greed, in whichever variation, it's always going to mar your decision making. And I've decided to just, expatiate on this before going any further, because I know a lot of people are witnessing different shades of fear right now, from anger to regret to panic to anxiety, and all the works and all the spectrum. And I need to repeat it and repeat it and repeat it and repeat it till it makes sense. So don't think that this is only happening to your portfolio. My portfolio is down by 75%, actually. But it doesn't mean anything as far as I'm concerned, because I know what it was 9 months ago. And compared to 9 months ago, I know that it's still a lot higher than what it was 9 months ago. So even though it looks like it's dropped from 100 to 25% at the moment, but I know that before it got to that 100%, it was already like 2 or 3x overall. So to now get sentimental because of that sudden drop, when I know what is really going on, will not be a rational and will not be a sensible decision. So what I'm telling you, in essence, is that these drops do happen during a bull run. And usually it's for the market makers to just collect from the weak hands. That's what I can just say. It's just like scaring a child to collect his biscuit or his snacks. That's exactly what they've done to most of the newer investors. I have tons of on-chain data to explain that as well, but that's exactly what's happened. So in terms of sentiment, it's still bullish, and actually on-chain there is reversal on-chain. I will show that in some of the slides ahead. And the market dynamics looks like, well, we're headed for the recovery. Once this weekend is passed, we only have 2 days in the month of July, and that's it. I mean, the month of June, and that's it. And I was showing something during the week about the 12 months moving average. And now during the week, even when we went down to 28, I was saying that we were going to bounce back, because the 12-month moving average is like an elastic support and resistance over a period of a year. And it's very unusual in a bull market for that moving average to get crossed. We'll get there shortly as well. So that's that in terms of sentiment. For regulation, we'll talk about El Salvador, and there was a story about some crypto highs to South Africa. What I would say to that, I think some people have asked me, and what I told them is that many of these things are actually not cryptocurrency based organizations. They are cryptocurrency labeled organizations, meaning they label themselves as cryptocurrency organizations with a view to hoodwink people and scam them of their hard-earned money. Most of them are just electronic platforms that creates all sorts of programs for people that adds money to their account every month, and people see the money, and they recruit other people, and then they use their money to they use Paul's money to pay Peter, until Paul and Peter also collect their money at the same time, then to make a run for it. So that's basically. I mean, I know there's a lot of it that's happening in Nigeria. That's still happening right now, but that's basically what happened in that South Africa story. Now, why am I saying Bitcoin is showing signs of bullish reversal? I have two slides I'm going to show you. There are on-chain metrics provided by Glassnode, and those metrics basically tell you what exactly is happening on the Bitcoin blockchain. So the first one is what we call Bitcoin liquid supply. Now, this Bitcoin liquid supply is like an hybrid Glassnode on-chain reports, in that it correlates the price with the total of what you call old wallets, and that's what Sam Strong has. So usually, you see a correlation, almost similar correlation between the accumulation of long-term wallets and the price. And when they start dumping, you almost invariably you're going to see the price dump. So long-term wallets are wallets that are older than, I think, 150 days, meaning they've held their Bitcoin for more than a 50-day period, 150-day period. Most wallets that have held Bitcoins for more than 50-day periods never sell. Never. And I mean never. Most of them never sell. More than 90% of them actually never sell their Bitcoins. The ones that sell their Bitcoins are usually 10% of those that never sell, 10% of those long term, and maybe like 90% of those other ones that are less than 150 days. So when you see this kind of what you can call a bullish divergence or a bullish convergence, meaning the number of holdings of strong wallets are going up and the price is coming down, it means that something is about to correct. It's a generally known phenomenon. When you see a bullish convergence or a bearish divergence, you know that there's about to be a reversal in any commodity. So this is just one of them. The other on-chain metric is what you call holder net position changes. Now, what it means is that the net changes in holder positions for all on-chain wallets. Now, it's interesting to note that this actually went into negative since November last year, and it's only just got back into positive now. What it means is that the net changes are just becoming positive, meaning there is more Bitcoin going to holders now than leaving the holders since November. So basically it means that, again, wallets are not selling. So you can see all through this period, you have more sales, meaning more withdrawals from wallets than more accumulation. But what has happened is that it has significantly grown smaller and smaller and smaller and smaller, and now it's beginning to pop up with some green at the end. So that's what's happening on chain. Now, what's happening on the exchanges, and that one is totally different. At the futures market, totally different story, because it's like people are kicking the ball around essentially. So it's crazy. As you see here, it's the first positive read is late October. Late October, if you remember, I can go back to the chart for late October. That was where the price of Bitcoin started picking up from the drop to 10K, and basically never looked back since that time. So that's that for on-chain metrics, to show you what's really going on behind the scene, and to tell you that really and truly, there's nothing like. In fact, there was another one I missed out that I should have added to this one, which is the number of wallets that have been added to the Bitcoin network. It keeps growing. A bear market is only established when the number of participants starts to reduce. So everybody's saying bear market, but the number of wallets is growing on the blockchain. So if the number of wallets is growing, then it means that something is not adding up, and very soon the truth is going to come out, because it's just like I always say, a stock that is underperforming actual real life company balance sheet report. Like, you look at the financial statement of the company, and the company has been doing well. And then their stock is going down and going down, going down. Everybody's like, why is the stock going down? Eventually, the stock is going to catch up with the reality that this company is a good company. Somebody is going to see that and is going to buy it heavy. And the day the person buys it heavy, that's the day all the short guys get squeezed out. Excuse me 1 minute. So in the same way, we're going to see some very violent movements in the months to come, especially from July. I think we're going to see some very interesting movements on the price of Bitcoin. Let's quickly go to our dear friend, the El Presidente of El Salvador. I'm keeping a close eye on El Salvador because I think it's going to be the case study for the mainstream adoption of Bitcoin for developing countries. So what these guys are doing is they partner with a technology company and they built like an electronic wallet, a digital wallet app, and they've asked that the citizens in the country sign up to the app. If you sign up to the app as a citizen, of course, you put in your data, of course, and all that. You automatically get $30 in Bitcoin. I think this is what Nigerians should be looking at. I mean, the Nigerian government. This is a very simple initiative, but that it will have achieved so much with this very simple initiative, because what it means is that you will have a central database of everybody that's an adult in the country, at least for the most part. And this wallet, I'm sure, is a Lightning Network wallet, meaning it's a layer 2 solution that will be using Bitcoin to settle and be operating transactionally within the wallets. So this, of course, will drive adoption, and it will also help them in terms of visibility, because right now they have problems with some problems with drug trafficking. If they're able to get all their citizen data on the app, as in you know who has the app and you know where the person is, because that apparently that app can actually work without cell signal. I think it's a good step for them, and I think this is actually going to trailblaze for the whole of Latin America, like I said last week. But this is a very good, very good one. I hope that I hope that they see it through, and that they don't topple their political process, or that the West doesn't topple their political process out of jealousy or fear. They also are set to install about 1,500 ATMs, Bitcoin ATMs, using this company called Athena. Athena is one of the biggest Bitcoin ATM producers. When you have 1,500 across the country, it's a pretty much good way to disseminate adoption across the country. So I have my eyes on El Salvador. I think they're doing very, very well. And in terms of Bitcoin adoption, I think the economy is going to be one of the strongest economies in the next 10 years, going by what they're doing right now. You can mark my words. Palestine, I mean, I don't know if you guys know about the Palestine-Israeli conflict, but I understand that Palestine is considering issuing a digital currency. To that, I would have said, well, yeah, sounds like a noble idea, but preferably maybe they should have considered using Bitcoin. Bitcoin will have helped them faster and better than trying to create their own digital currency. They're already in a disadvantaged position already in the relationship with Israel. So the only thing that can get them out of that space would definitely be, going with something like Bitcoin. I'm not sure how far this digital currency is going to help them. Of course, it might help them in terms of, they might be able to move money electronically and all that, as opposed to having to carry loads of cash or stack of cash around, and the logistics of producing money as well for them. That might be some of the benefit, but over and above that, I think it might be better off if they had considered adopting Bitcoin instead. Moving on, MicroStrategy, our dear friends at Michael they've been buying the dip again. I think they've added about 20-something thousand Bitcoins in the last 1 week now. So almost 20,000. So their stash is a bit over 120,000 Bitcoins now. And they still have more, because if you remember last week and 2 weeks ago, I was saying that they wanted to raise 1.5 billion, 1 billion by selling some of their shares, and 5 billion by raising debts. 500 million by raising them. And they were oversubscribed on both accounts. So now they're probably going to be buying all the dips that we're going to see this weekend, or we're seeing right now, because they're loaded like that. And I think at the end of the day, this company has potential to be, in the next 10 years, more valuable than Apple and Google stocks, because the bulk of their balance sheet now is essentially on Bitcoin. And what that means is, even if we go into a bear season in 2022 and Bitcoin becomes what it is today, maybe like 30K or 40K, the overall averaging that they will have done will still have paid them, because the average price for Bitcoin that they were, even with this new acquisition, was still about 26,500. The average price of everything, of all the 120,000 Bitcoin that they have. So if they do go into bear season and they decide to sell off some, they will still be in profit. And what people don't understand, and I think I've tried to say this, is that they're trying to bank the profit of the company and prevent it from depreciation. I'm not an accountant, but because of the work I do as a technologist, I work a lot with accounting softwares and accounting principles and all that. And when you have an asset on your books in accounting, you need to calculate for depreciation, and you need to determine what the depreciation rule is. The reason you need to do that is because government is always printing money. And even if your asset is an asset that doesn't depreciate, like that is not like machinery, you still need to factor in that depreciation, because the government is going to print money, there's going to be inflation, and you're going to have what you call the hurdle rate, which means how much you will need to make as a company in profits to beat the inflation. So for him, it's almost like MicroStrategy is taking a shortcut that many of the other companies have not figured out yet. When they figure it out, Bitcoin will not be available for anybody. You can mark my words. Because when they figure out what is actually happening with MicroStrategy, everybody will buy Bitcoin immediately on their balance sheet. Because what it then means is that you are sure that that portion of your balance sheet is intact, it's not depreciating. No matter how much money government is printing, you have retained value. For me, like I always say, if you're into stock, you should load up on MicroStrategy. Definitely. They're going places. They've already done how much? I can't remember. They outperformed Bitcoin as of January this year. MicroStrategy outperformed both Bitcoin and Nasdaq actually. So with this new acquisition, I think it's just the beginning. Another story in Latin America, there's a country called Paraguay. The reason I knew this country back then was they were one of those countries that used to give Brazil and Argentina like serious headache. They never succeed in beating them easily, because as unpopular as they were, they had very strong players. So that was how I got to know about Paraguay. But I know that Paraguay, along with like 6 or 7 other Latin American countries, are already considering, what to do with Bitcoin. So now, American Open University of Paraguay have said, we're going to accept Ethereum and Bitcoin as tuition fee. I stopped for a moment because I wanted to think about what that is going to do for education. So educational institutes are also openly now choosing to migrate their balance sheet into cryptocurrencies. The professors and the smart ones among them will have figured it out. And if they listen to people like Michael Saylor, they'll figure it out a lot quicker. That we also can't store value. So even if you get funding from endowment and from alumni and all that, we also can't store value in our endowment fund without banking it in stuff like crypto. A good example actually is Harvard Law School. Harvard Law School is one of the biggest holders of Uni token, Uniswap. In fact, it's not, it's probably it's the biggest. Harvard Law School is the biggest. Harvard Law School has the biggest stash of Uniswap. And I think we found out about 2 or 3 months ago when they were proposing a change on the protocol. And, when you're proposing a change like that in the community, you need to back it up. And people found out that, they had the number of votes. The people now found out that, they had the number of votes because they had the highest number of tokens on the network, on the Uniswap community. So the same story goes for these guys. And I'm sure they're not alone. Many, many institutions will be secretly or openly adding cryptocurrencies to their balance sheet. So if governments are doing it, corporate organizations are doing it, higher institutions are doing it, I think I will be a fool not to be doing it as a person, because it means that they see what I'm seeing, or they see more than I'm seeing. Grayscale Trust. I talked about Grayscale Trust last week, but the reason I brought them up this week was that I found out during the week that the GBTC, which is Grayscale Bitcoin Trust, it's like an exchange. It's not an exchange traded fund because it's like a secondary product. You can't trade it on an exchange, but you can sell it in the secondary market of the exchange. So Grayscale was one of the first that created this product of Bitcoin. And they've been selling at a premium for most of the last 18 months. But in recent time, they've been selling at a discount. And what's now happening is institutions are making a run for the discount because, let me explain how it works. If Grayscale Trust is selling at 15% discount, it means if the price of Bitcoin is 30K, it means that, they can buy it for like 25,500. They can buy the Grayscale Bitcoin Trust shares for 25,500. Now, if they buy it for 25,500 and the market starts to recover, usually when the market starts to recover, the Grayscale Trust goes into premium, meaning it starts selling above normal market price. What then happens is they can quickly flip it and sell it at the point when it goes into that. I understand that there is a holding period of 6 months. Some of the holding period just expired this week. So many of those Grayscale Trust shares were sold between, I think, 18th and yesterday. So whatever dump, as I said, whatever dump is going to happen just has a few more days. And that'll be the end of it, because then all of it will have been mopped up by whichever institutions is interested in buying at this level. But it's interesting to know that anytime Grayscale Trust goes into a discount, the price of Bitcoin is going to rise. I just thought to point that out. In terms of Coin Spotlight, the Coin Spotlight for this week is Reef. It's called Reef Finance. Some people know about it because I think I've given it as one of the coins to buy on the WhatsApp group back in February or March. It's DeFi coin, but the peculiarity is that it sits on the Polkadot ecosystem. Why is it important? One, it's DeFi. Anything that is DeFi, it's important because DeFi is going to consume significant part of the world of finance as we know it. And so any token that's serious in the DeFi space, like these guys and Uni, they are going to be very, very pricey in the future. It's currently selling at about 1.5 cents. I think it's a good buy, if you ask me. Not a financial advice, but I just thought to point it out. There's going to be some price appreciation in the month of July because Polkadot is launching one of their parachains in the month of July. So there'll be a lot of buzz around the Polkadot ecosystem. So I think this is one to look out for, both in the near term and in the medium term. In terms of the vital stats are not looking good for the markets generally. Of course, because of that sharp stab that we had during the week, you can see the market has lost significant amounts. Almost 300 Yeah, I think it's almost 300, no, 200, 200 billion over the last week because of that, because more people have been forced to sell their positions emotionally. So we're sitting at 1.2 trillion overall. Um, Altcoins have dropped significantly, and that's why for people that have been still checking their portfolio, especially if you're holding a lot of alts, you see that there's a significantly drastic drop in the value of the alts. Again, nothing to worry about in the long term, because when the market eventually recovers, what will then happen is most of those alts will not go back to that low. So I'll give you an example. If you take Kusama or Chainlink or Polkadot, Polkadot was selling at, how much was Polkadot in December? Uh, Polkadot was selling about $10 actually. Yeah, Polkadot was selling anywhere between $10 and $13 in December. Now it went as high as I think 40 something. Now it's crashed back, but the lowest I think it got was like 14. It never got back to the original low that it went to. So that's the way it's going to be. And like I said, I think there'll be two or more, at least two cycles like this before the end of the year. So I expect that most of the altcoins that you're seeing today, you're not going to see them at this price again this year. You might see them again, at prices close, maybe not close to this, maybe a bit higher than this in a year or two's time, but you're not likely to see them at these prices anytime soon. In terms of our multi-factor index, we're still bearing up. We have 25 last week, we're 27 today. So we're gradually getting out of the fear sentiment. It's still there, and that's reflected on the market as well. As you can see, the prices are not moving significantly higher. So they're still fair. I think that would probably continue to the end of the month, and then once the month is over, it's a new quarter. So it's the second half of the year. It's the beginning of summer. There will be a lot of positions to be taken, both by institutions and retail, heavy pocketed retail traders. So there will be a significant bounce. So in terms of where we are, for the most part, I think we're here right now. We'll need back to a recovery is possible. For most people, and for most of the YouTube talking heads, everybody's been shouting like, "To bear market, we're going to 20K, we're going to 17K, we're going to be in and it's funny because these are the same guys that have been saying, we're going to 500K, we're going to 400K, and all of a sudden, uh, the they're suddenly crying wolf. But the data does not lie, as I always said, and that's this is a very algorithmic asset in its behavior, in its long time price action, not the short term one that's been manipulated. The long term, multi-week, multi-month behavior, you can see even on the logarithmic scale. It's almost twisting my tongue. On a logarithmic scale, you can see that it's still a long-term, like drawn out bull run actually with major corrections. So we're here somewhere between hope and optimism that the rally is going to get back. I think we're going to have a very short time to get to euphoria, and the reason being that really and truly we have about 6 months or less left in this bull run. Once we hit December, officially the bull run is over. By so many standards, actually, by historical data, by mathematical projection, all sort of, by on-chain metrics. By the time we've gone to December, we officially have spent all of the energy for the bull run. What I think will happen is there'll be massive sell-off in November, then a huge rally in December, like a blow off top. Like if the market is still going to go up, then you probably see Bitcoin price plunging from there. But I don't think from there to now plunge back to 30K. No, I think, to be honest, it might be like maybe 2 or 300K at that time. So you might be plunging back to 100K or 70K or 60K. But that's where we are in the general market cycle. And for people, just to put people's mind at rest, that we still have 6 months left, and I think we're still going to get at least 2 all-time highs, major all-time highs before the end of the bull, major ones. Of course, we all know 100K. 100K is inevitable, whichever way. No matter what the market looks like now, no matter what anybody's saying, 100K is inevitable this year. The next peak is what I don't know, and that can be between 200 and something to 400, depending on how crazy the market goes. If you saw the reports today on inflation, you see that it's been the highest so far in, I can't remember how many years, the inflation reports. And you could see S&P rallying as well. So these are indications that at some point the money is going to find its way back to crypto. In terms of technical analysis, let me just bring out my charts here. Yeah, so in terms of technical analysis, a couple of things I wanted to show you. I wanted to show you this particular chart. It's not a common chart. It's called BTC shorts. BTC shorts are the amount of people that are shorting Bitcoin in the derivatives market. So this is the weekly view. I'm going to show you now. Take a mental note. This is the last candle. This is the current week. Take a mental note of where the low is. The low for this week is 2022. Now, when I switch to daily, you see what I'm saying. When I switch to daily, you see that the low for this week was actually like the low for today. So it's gone from almost just above 2,000, and it's done more than 1,000% in a single day. What tells me somebody wants to play a big game of manipulation. Say that the person has so much money to lose, or they're looking for ways to make so much money from the market. But this is huge. This is a 1,000% increase in the amount of shorts within 24 hours. I've not seen that before in a long. I've not seen that actually at any time before now. Going back to the history of these charts, I've not seen it at any time at all. So that's why I said, we might see some drama, and it might just be a flash attack on what I call leverage longs. Leverage longs are people who trade futures and leverage for the price of Bitcoin. So what happens? Let's say they put in 0.1 and they're trading 1 to 10. That means they're taking a position for 1 Bitcoin. If it goes their way, let's say they make 100%, that means they make another 0.1. If it doesn't go their way, and the price hit their stop loss, they have lost their 0.1 Bitcoin. So this might be an attempt of attacking the long traders to wipe them out in the short term. So a couple of things I was talking about during the week, and I said I was going to talk about it today. One was this very interesting chart. This is the monthly chart for Bitcoin. And why I'm bringing this up is actually because of this red line. You see, this red line is what we call the exponential moving average, the 12-month exponential moving average. What's the meaning of that? It is the average of the price over a period of 12 months. Since it started clocking itself on this particular exchange, which is in 2018, the price has only been below it for 1, 2, 3, 4, 5, 6, 7, 8, essentially signifying the end of the end of the bear market. Because since 1st of May 2019, it's gone above it. It did come below it slightly in December and slightly in March when we had the COVID crash. But you can see that it's literally sat on it and actually moved away from it for the most part in the last 10 months, in September. Now, what this means is that the price had actually been away So I've left another indicator on the screen, which is a Bollinger Band that shows us the standard deviation relationship with the price. We've been trading on the upper limit of the standard deviation for more than 10 months. And now we'll come back to the median. And that was why I said at the beginning of the week that I don't see the market breaking this line, which is 32. It's now 32.7. I don't see the market breaking below 32.7, no matter what, over the weekend. And I don't see, even if you know you have all the shots and everything, I don't see the month's closing on Wednesday. I don't see the month closing up below this 32,700. I don't think so. I start to record. Let me go back to weekly charts. So the same thing for the weekly chart. So if you look at the weekly charts or the weekly view, you see that for the last 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, now the 6th week, we have unsuccessfully attempted that line. I left it in place just so you can see what's been happening. So we didn't break it the first time, we didn't break it the second time, third, fourth, fifth time. I don't think we're going to break it now. I know there's a strong attempt to, you know, make it break it now, but whoever is shorting the market, if the market goes all red till, so let's go to daily. If the market goes all red till Sunday, let's say. So like what you're seeing here is they've shorted the market now so that it looks like a bearish engulfing, meaning a reversal sign that makes everybody this is a sign that makes everybody run away. I mean, every trader will want to run away at this point. But what would then happen is, because there is a buy wall, massive buy wall, somewhere between 27 and 28, it's going to send the price back up. And when it sends the price back up, it sends the price back up above this 20% Fibonacci. I think automatically the recovery will be in place. So even if this happens now and it's sustained till over the weekend, let me just draw this out a bit. If it's sustained till over the weekend, I think by Monday, Tuesday, market will recover again, and then will still come back above this red line, which is the 20% Fibonacci retracement level. So that's for me, that's the outlook for Bitcoin. I don't think there is much to be done in terms of the market makers trying to short the price. They will try, but I don't think there's anything that, I mean, there's only, as I keep saying, there's only a limited amount of Bitcoin in circulation, really and truly. So unless you are willing to sell your own, when it finishes, it finishes. So the price will have to bounce back naturally by your natural order at some point. So for people who are getting scared, and you know, I've been seeing a lot of tweets by people like, "Oh, what's happening? And the market's going crazy. What's happening to the price of Ethereum?" Good opportunity to dollar cost average and buy more. That's you know what if you have I mean, not a financial advice, but if you have a job and you have savings, or you have plans to have savings, I think it's a good time to use the savings to buy some of this, because you might not see them at this price for the next 3-4 months. Again, not a financial advice, just myself. So that's what I have today. I think I've talked a lot about the market makers already. If anybody has any question or you want to talk about anything, please let me know. Like I've said, whatever is happening this weekend is not really of significant consequence to the long-term price action, because everything is bullish. Everything on chain is bullish. So regardless of the abracadabra that is being played by the market makers, everything is bullish right now. So questions or anything that's, you know, anybody needs clarification on, we have about 10 minutes before we call it today. If you have question on Instagram, just type in your question. I'll read it out and then I'll answer it. If otherwise good, I hope everybody can meet themselves. So there are no questions. I think it's a good opportunity to call it today and close early for the week. Okay, somebody has a question. Okay, somebody says, thanks for your time. I usually hold for long term, but I'm worried about the frequent manipulations. Okay, I'll explain what you can do. Like I told one of my buddies today, who was worried about him not taking profits and seeing the market crash and the value of his portfolio dropping. Two things. One, I think you should split your portfolio into three. Just try to follow my logic. I think you should split your portfolio into three. Have coins that you're not going to sell for at least one bull cycle, or have a proportion of tokens that you're not going to sell for at least one bull cycle. Have another proportion that you plan to sell at the end of this bull run. Then have another one that you plan to sell once you are more than 100% or 200% profit. What that will do for you is that it will save you from the feeling of loss. Because I understand that sentiment that, like the guy was saying that, 2 months ago, my account was 260K. Now my account, I can't even look at it again. It's less than 80K. I understand what you mean by that, but again, it's your time horizon. What horizon are you basing your judgment on? So this is a person that 80K was like, let's say, half or 1/3 of the size of his portfolio just about 10 months or a year ago. But now, because the market had grown so much, and then there's some correction, his frame of reference is the latest, largest gain that his portfolio has seen. And because of that, he's feeling bad. So what I told the advice I gave him was, once the market recovers, take out your initial capital so that you can objectively deal with the market. If you are people, there are people like that don't like to lose money. You can't be a good investor if you don't like to lose money. But what I can say to help you is, in this case, once your portfolio gets back to normal and you've made, if you make 100% on any of your tokens, take out your initial capital and don't reinvest, so that you will not be sad and you will not be psychologically depressed and worried. But if you do what I told you, if you break it into that category, what it then does is that your trading or your investment horizon will then guide how you approach the market. So what I told the guy is that you're working, you're a contractor, you're making money. Why do you need to be worried about, whether your portfolio is 240 today or is 50 tomorrow, knowing that it's going to go back up? I understand, yes, you could have sold when the market was really high and bought back cheaper and you have increased the portfolio. But yeah, nobody saw this particular one coming. But we know now that after the reggae played the blues, after you have a crash, you have a recovery. When you have a recovery, you're going to have a spike in price. When you get the price spike, sell off what you want, so that you don't feel bad of not getting anything from the market. But that in the real sense of it, your loss is not as quote unquote and unquote colossal as you're thinking it is. Because what will happen is, once the market goes back to 2 trillion or 2.2 trillion, all of a sudden you find out that your portfolio is back, and it's probably more than what it was before, because the price will have gone higher. So my advice to you, honestly, will be to take out your initial capital once we get back to like 65, 70K. I think that will give you some, I don't want to use it, maybe peace of mind is a good word. Then, when we talk about the passive income class, you can do some stuff that will earn you passive income, and you won't have to worry about the price fluctuation so much. That would be my advice. That was a good question, by the way. Thank you, Mr. Wale. Any other question before we call it today? Yeah, Mr. Albert, go ahead.
I want to know, how does effect of using trading bots has on the price of the market. Maybe using boat to trade on the market, does it also has an effect on the price of the coins?
Okay. You know that not only retail traders use bots. In fact, bots just became available to retail traders, I would say, maybe the last 3 to 5 years. Institutional traders are the ones that used to, use bots significantly. And bots are, they're not sentimental. How do I put it? Bots are very algorithmic in their behavior. If A is equal to B, then B is equal to A plus B. That's how the bots work. So when the conditions are met, the bots execute. Now, when the bots execute, the bots are executing based on some factors. Now, what the market makers are seeking to do is to get the bots to make that decision by moving the price in a particular manner. And that was what I was trying to explain last week. Now, when you're studying the chart as a trader, the chart is showing you what's happening on the market. But behind the scenes, the market maker is also looking at a way to push the market in a way that the chart will be presented in a particular manner. Because they know that if the chart is presented in a particular manner, automatically traders will respond in kind. So bots will automatically trigger when you have large movements. That's natural. Most bots will be triggered when you have large volume movements on the market. So for instance, the drop that you had just now, what was that? Hold on, let me get my charts out. That was the drop we had. Let me go back to 1 hour. Yes, this drop that we have now will have triggered some bots. As you can see, this was filled up in the last 1 hour from 31,500 essentially. Spiked up to 32 plus. Now, part of the reason why you have that spike is because there are bots that have pending orders or limit orders sitting at 31, sitting at 31,500, sitting at 31,200, sitting at 31,100. So automatically, when you have this kind of drop, the bots are going to pick it up. There are also sell bots that get on the futures or derivatives that get triggered when you have large sale orders pushed on the market. Some of those bots, their own trigger is to stop loss, meaning they are going to close out the position they are holding. I mean, I know you understand what stop loss means, but the effect of a stop loss on the market is to to expand the effects or to aggravate the effect of the sale, the original sale. So the guy that did this dump from 34 will have triggered some short sales and some long stop orders. When those long stop orders close out, what they are doing is they are selling at their stop loss price. By force is a sales by force. Let me use that word. So they are selling by force at those prices. When they sell by force at those prices, it drives the price further down, which can trigger bots at lower levels. So it's almost like a vicious circle, and it keeps triggering and triggering and triggering until it gets to what you call a strong support level where you have a buy wall bigger than the amount of sales that's available. So let's say everybody that's been selling now have been selling, let's say 200 billion worth of 200 million worth of Bitcoin. Then here you have a buy wall of 500 billion. Of course, what it gets here, all the sales are consumed. Then there is for a short period of time, there is no other thing to be sold. And except the short sellers now start selling again at this point, the price is going to keep going back up. So yes, the bots will react normally to the market movement. So even though they're not the originators of the movements, they will react accordingly, and they will aggravate the effects of the market real time. Somebody says, you used to see the price of Bitcoin 100K. It's going to go beyond 100K this year. There's no doubt beyond that. I mean, it's a given. If you want to have a bet with me, I mean, I'm very game with that one. I mean, it's a given that Bitcoin is going to exceed 100K this year. You cannot have the level of adoption you have now, practically in the middle of bull run, and I mean, it's inevitable, especially when we start seeing the longer term effects of this inflation in Q2 and Q3. It might be very fast, but the price is going to get there. Let me just keep it there. Please, can you remember last week's spotlight coin was Uniswap. It was Uniswap. Ticker is Uni. The ticker for that was Uni. I also mentioned the Central Lands in passing because the Central Land came in the news when somebody sold the digital real estate for 980,000. And I was saying that, well, I don't have any of mana at all. But I think it was something interesting. And in the future, I mean, maybe not in a generation of people like us who are around the fourth decade of our life, but the younger generation, millennials and co, they will have a lot of fascination with virtual reality, and definitely there's going to be a market for it. There is already a market for it, but it's only going to grow. Yes, Uniswap is the one that's due for the upgrade, version 3 upgrade. It's already applied on the platform, but I think it's going to go mainstream in July. So that was that for last week. So yeah, I think I've covered all the questions. Thank you, everyone. Have a lovely weekend, and for your own health. Like someone has said that uninstall this Binance app. I say, yeah, as long as you don't forget your password, it's all right. So that you don't get emotionally triggered to take a wrong decision. Have a lovely weekend, everyone. Take care. Bye. Everybody on Instagram, TY, Noble Felix, Tayo, Dr.
Thank you
Gwenchi.
very much. Bye-bye.
Have a lovely weekend. Though.